everyone will introduce themselves shortly. The purpose of today's webinar is to go into an area of transfer pricing, which is probably less familiar to most. And it's an area which kind of looks more around the implementation, the more financial data, ongoing monitoring elements of transfer pricing. So when we talk about transfer pricing, we typically think of around our transfer pricing policies, cost plus, operating margins, cups, different elements like that. We also think about transfer pricing documentation, think about local files, master files, country by country reports, and those aspects of transfer pricing. We think about transfer pricing audits, transfer pricing presenting to tax authorities, rulings, APAs, bilateral APAs. But one element of transfer pricing, which we'll discuss in more detail today, is around the actual implementation, about how transfer pricing actually is implemented, how we go from policy through to documentation, ultimately through to the audit cycles within financial systems. We'll also look to discuss another area of tax transfer pricing, Pillar 2, a highly data-intensive area, which more and more companies above 750 million euros are having to deal with, and about how the need to kind of pull data together and analyze that data and keep monitoring that data on an ongoing basis is very important for groups, and we'll see more and more companies trying to get a handle of that and be able to manage it on a more ongoing and practical basis. Today's session is going to be recorded, as you heard at the beginning, for reference. If anyone I think leave after the webinar, that will be shared with relevant people relevant attendees, or people who want it can certainly reach out to us. If we go through to the next slide, Midhun, please. Okay, so just by reference, we're just going to do a few introductions. My name is Ben Blumenfeld. I'm a transfer pricing partner in PwC Israel, leading the PwC Israel transfer pricing operations, working with many companies across different sectors, both in Israel and overseas. Moving on to Yuval. Vaina.
Yes, good morning. My name is Yuval from SAP Israel. I'm a CPA working with many companies on the financial transformation. And transfer pricing is one of the hottest topics today. Thank you. Good morning. Over to you.
Yuval, Vaina.
Yeah, hi. Good morning, everyone. Thanks for joining. My name is Yuval Weiner. I'm a senior manager at the Israeli tax department at PwC. And I'm one of the leaders of the Pillar 2 practice here in our tax department. And in the next hour, we'll be discussing how the SAP solution can be relevant for your Pillar 2 compliance.
Hi, good morning. My name is Moshe from PwC. I'm an accountant heading the SAP practice here in PwC for the last 3 years, working closely with Yuval on a solution for the office of the CFO as well as transfer pricing. Thank you.
So good morning, everyone. My name is Navjot Kalra. I'm the global leader for SAP solutions when it comes to operational transfer pricing. I'm also a partner for tax technology based out of Mannheim in Germany. Very happy to be here and looking forward to see how we can assist you. Midhun?
Yeah, thanks, Navjot. Hi, good morning, everyone. I am Midhun, working out of PwC Germany. Coming to my experience, I'm a solution architect, designed, developed, and implemented tax solutions, operational transfer pricing, and Pillar 2. And over to you, Navjot, for the agenda.
Thank you, Midhun. So we've got a very interesting agenda outlined here, and for the next 1 hour or so that we have here with us, we will start first of all with what is the problem statement. So what are the challenges that we typically see with the operational TP scenario and BEPS Pillar 2 as well. We will also share some market insights and the trends on how various organizations are tackling these challenges. And shortly after that, we will get into how technology solutions, especially in this case, SAP PaPM as a platform, can help to overcome these challenges, make your life easier as transfer pricing experts and Pillar 2 responsibles in-house. We will also get into the angle of what are the innovations done by PwC on this front. As you can imagine, technology as a platform from SAP is the ladder, but then we also have the tax angle that comes on top of it, which is where PwC plays a major role. We will also do a demo of a solution that we have innovated, and we will also open the round for Q&A. So you have the Q&A box at the bottom of your screen. Use that to send in your questions. You do not have to wait until the end. We will see how many questions we can take, but we will try our level best to answer as many questions as possible. If we are not able to answer all of them, in any case, you can reach out to us, and happy to have a one-to-one conversation with you. With that, if we move on, so before we deep dive, why are we even here today? And the question is quite important, and it would not have been any more important as before. So automation of tax processes is today is a must-have, and no more a nice-to-have is the tagline. And why do we say that? You all are aware as in-house the challenges that you have been seeing. Now, there are internal and external challenges. So if I focus on the external challenges, we know the tax authorities are becoming more and more digital. There is more scrutiny. There are more and more compliance requirements globally popping up here and there. And the need of the hour really is that you need to rely on, you need to come back with data and reports quite quickly. So it's no more a possibility, the way of working that it was before, it's no more a possibility that you can have a sustained a solution with that. So you need a solution for covering all these compliance requirements in a way which is efficient, meaning you need to have access to data in real time. You need to ensure that your processes are well harmonized. You have to ensure how can you avoid all the year-end adjustments that you have to rely on heavily. And all of that can be done if you have access to a system which is directly connected for doing all these calculations. So, of course, improved accuracy and compliance is the need of the hour. So audit trail is a must today. Gone are the days when you had like weeks to come back with your reports and then be able to compile it from the Excels to be able to produce it to your tax authorities. Today, we are talking about systems possibility that there is a request and within hours you are able to respond back. Enhanced data visibility and decision making. We all know what is going around in the global world that we speak. It has changed since the new government took charge in the US, and we know we need to have better solutions, integrated solutions to have insights that is more real time, and also the data that you can trust so that you can make better decision making quickly, right? So the whole aspect is around continuous monitoring, but also possibilities to simulate your scenarios. What are the impacts because of customs? What are the impacts because of a supply chain that is changing and stuff like that, right? So with all of that, if you see with internal and external factors, automation of your processes for transfer pricing or for Pillar 2 and various other tax use cases as well, it is no more nice to have, it is a must have. With that, if I may pass the ball to Ben to throw some light on what are some of the trends and challenges that we see around transfer pricing. Ben?
Sure. So we go on to the next slide, please. Here we have a good slide. I think this kind of shows what I would say is what you could call the transfer pricing life cycle. If you go from boxes 1 to 6, you go through you can start with your general creation of transfer pricing policies. And that's, if we go even from, say, from a startup company through to a company as well, which is many intercompany transactions, the first thing that company needs to ascertain is what transactions are taking place, and then determine what transfer pricing policies or transfer pricing models are most appropriate for those transactions. And whether you're a company with one transaction through to a US subsidiary, as an example, you're a company with many transactions with many IP owners across the world, this is something which is every transaction needs to be identified in a transfer pricing policy will need to be determined. Then once policy is determined, you move over to kind of like the price setting. Okay, so what markups, what margins, how to price each transaction, different methods and different approaches. And you kind of conclude on that and get to the best approach, which works well from kind of within the transfer pricing rules, within the transfer pricing guidance, and also for kind of like an efficiency and sensibility perspective from the perspective of the group. And obviously agreements are put in place. And that's typically what, certainly as transfer pricing advisors, we help many, many companies and many, many groups do and build their transfer pricing. Then what typically happens is we go jumping over 3 and 4, we get to 5 and 6, or 5 and then 6 maybe in the future. But 5 is put in the documentation. So we have a policy, we have agreements, we have all the paperwork in place, and then we prepare a documentation to ensure that tax returns are filed on time, forms are filled in within tax returns, to make sure your right documentation is in place or available should a tax authority ever ask, and ensure that the documentation aligns with the policy and the agreements and the pricing that we just discussed in sections 1 and in the boxes 1 and 2. And then if an audit happens, we go and present that to the tax authority. We come with our transfer pricing paper, our transfer pricing tax return forms, and we say, here's the data, here's all the information, and everything should work. What typically sometimes, or maybe isn't focused enough, or both from tax professionals, also from in-house tax people, possibly is boxes 3 and 4. That's where what I would call the implementation or operational transfer pricing. That's where everything that's theoreticized and put into documentation all needs to cut. That's the link between the two. What's actually put through the financial systems? How is the system put in place? How is it set up in the right appropriate way? In box 3, and then obviously on the 4, monitoring it. How are we managing the margins? If it's an operating margin, how are we knowing when to make adjustments? How are we knowing how to put those through the year-end adjustments when required? And keeping a general ongoing monitoring of the situation of relevant companies and relevant companies within the group. So boxes 3 and 4 typically may even sometimes, depending on the size of an organization, may leave within the realms of tax, finance, or even maybe go to different sections or departments within finance to be responsible of. But the question there is, how can we ensure that boxes 3 and 4, the operational element of the transfer pricing, are managed in the most efficient way to provide all different parties and all stakeholders the information they need that's required, both for transfer pricing adjustments, pulling out data, ensuring the data is being in the transfer pricing policies being applied accordingly, such that when you do get to documentation, and ultimately, if needed on an audit, all data can be pulled off at ease and with a relevant level of comfort that it's correct and that no surprises will arise. Frequently, once a company does get to audit, sometimes there are discrepancies in data, it's hard to provide the data, and those processes can take sometimes days, weeks, or even months to provide, which can obviously create a level of tension and frustration with a tax authority or as part of an audit process. So if we move on to the next slide, highlight some of the areas, some specific areas where we see challenges arise. So some we've already mentioned. About timing is obviously a key one. I think Nav mentioned it. We mentioned it about provide data as needed, both from a monitoring perspective to see how the transactions are, or how the ongoing pricing is working, to see if there needs to be adjustments or during the year, as well as timing in terms of providing data as needed to relevant stakeholders, specifically tax authorities, finance departments, tax professionals. That's obviously important. If it's a lot of companies go and work on Excel, that's a lot more manual process. Can that be automated in a certain way? Now, a lot of these ideas that we're going to present today can be varied across the size of a group. Not every group needs to have a significant solution, but that will vary depending on the need and the size and levels of transactions. Can the data be provided, be up to date? Can you see what adjustments need to be made at year end before closing the books to make sure that they get the right numbers in the financial statements of the relevant service company, so that that can align with the tax return, align with financial statements, align with transfer pricing documentation. And then making sure they are doing a consistent approach across different companies, different organizations, different services. For example, if you've got a group which has several limited risk distributors, are we applying the same treatment in respect to income recognition, OPEX calculations, etc., and determination of profits to make sure everything is aligned and consistent? And also importantly is having an audit trail, being able to show where the data comes from. Certainly, if you look back over, I'd say since the introduction of local file, master file, and BEPS around about 10 years ago now, one of the key things that's resulted in is the need to be able to show and prove that what you're implementing is what you said you're going to implement. And having that audit trail is a key part in being able to justify to tax authorities, both here in Israel and across the globe, to show and evidence them that you have a strong control process or control over the overall transfer pricing processes that you have in place. So I think that's, in a nutshell, the key benefits that managing or oversee or controlling or applying relevant thought and process and consideration to your operational transfer pricing. Those are the benefits it can provide. And as Nav, Yuval, and the team here are going to explain as we go through, these are certain ways we try more that ERP systems, SAP systems, other tools as well are able to kind of like help manage and be able to provide the sort of help system providing solutions in these areas. Moving on, Yuval Weiner will talk about Pillar 2 and the needs that take place, that we see arise there.
Thanks, Ben. So hi, everyone, again. Can you click again, Midhun? Thanks. And again, yeah, thank you. So I guess most of you have heard of Pillar 2, but just to align, or for those of you who haven't heard, in a nutshell, Pillar 2 is one of the biggest revolutions, I would say, in international tax in the past couple of decades. What it does, in essence, it imposes a 15% minimum tax on multinational corporations with a consolidated turnover of more than 750 billion euros. Generally, it does so on a jurisdictional level. However, additional collection mechanisms exist, and the tax can be due in other jurisdictions within the group as well. So to date, more than 40 jurisdictions around the world have legislated Pillar 2, and Israel is expected to do so next year in 2026. So in essence, if your group meets the 750 million consolidated turnover threshold and the ETR, the effective tax rate in any jurisdiction, is below 15%, what we are about to speak about and the following is most likely relevant in at least one jurisdiction within your group. Next slide, please. So without getting into really the bits and pieces of Pillar 2, and at the end of the day, it will be necessary for the multinational group to submit tax returns in all relevant jurisdictions with the applicable top-up tax, which is in essence the difference between 15% and the effective tax rate in that jurisdiction. So this is a compliance effort, and what we're going to discuss is in essence how to get there in the most beneficial way. So Pillar 2 sets a new set of rules for the calculation of the effective tax rate, and this is the major complexity that companies in essence encounter. And this is where your journey basically begins, by first of all understanding the rules, and this is something that PwC can assist with, our Pillar 2 team. You need to identify the relevant jurisdictions which are impacted, and currently many of the jurisdictions within your group can be impacted, even those jurisdictions when Pillar 2 legislation doesn't exist, again due to the various collection mechanisms that are already legislated throughout the world. The next step would be to gather the information which is relevant for the data which in essence comprises the effective tax rate calculation, which is the basis for the calculation of the top-up tax, meaning the difference between the 15% and the effective tax rate within the jurisdiction. In order to do it, in order to perform the calculation, it is necessary to find the right technological solution, which in essence can reduce the burden on the various teams within the group and make your investment significantly lower in performing the calculations and in essence taking care of the whole compliance process when it relates to Pillar 2. Because as I said at the beginning, this is a compliance effort, filing effort in various jurisdictions around the world, and this is in essence what the SAP solution is aiming to solve. Next slide, please. Okay. So as I mentioned, one of the main challenges in Pillar 2 is the assembly and the gathering of the relevant data, right, for the Pillar 2 calculation. As there are many data sources relevant for the calculation itself, not only within your ERP system, but outside of the system as well. The first step would be to map this data, to identify the relevant data, the relevant points for the calculation, for performing the ETR calculation. This is somewhat complex effort, and this is something that PwC can assist you with this data mapping process. In addition, there is complexity surrounding the extraction of this data, in addition, of course, to the calculation itself, due to the various methods of calculation and the complex Pillar 2 rules. In essence, what Pillar 2 does, or the Pillar 2 rules do, is reinvent the way you calculate your effective tax rate. You have calculated your effective tax rate so far. And this is why technological solution is so important here. In addition to the reporting for compliance purposes, companies also have their quarterly and year-end provisions, and the reports that need to be, disclosures need to be part of the quarterly and year-end financial statements, in which the Pillar 2 ETR is also part of. So in addition to the compliance, you have a quarterly provisions, and this is something that should be also taken care of. Next slide, please. So what in essence the SAP PaPM does in relation to Pillar 2 is to assist you with the data collection, which is, as I mentioned before, is a crucial component of the calculation itself and of the compliance process in its entirety. PaPM can also perform the Pillar 2 calculation itself, computing the ETR, and thus helping you understand what would be, if at all, what would be the top-up tax. Again, the difference between the 15% and your effective tax rate. The calculation that the PaPM systems offers is based on the general OECD rules, and it can give you at least a sense of where you stand from a Pillar 2 perspective. PaPM also works in harmony with PwC's tool, which is called the Pillar 2 engine. The game changer in the Pillar 2 engine is that it can perform a full calculation based on domestic legislation of Pillar 2 in each jurisdiction, and also provide you with the reports, the compliance part, right, which should be submitted in each of the jurisdictions. The Pillar 2 engine needs the data to be first BEP, and this is the first step in the process that we mentioned before, and it needs to be collected and input into the engine for the purpose of performing this calculation and extracting the relevant forms and the tax return. And this is where both tools, in essence, work in harmony, as PaPM can be used as a way to gather the relevant data and to be input in the Pillar 2 engine. So both tools support a more holistic approach towards the Pillar 2 calculation, towards the compliance effort. In practice, you can be sitting in Israel and generating tax returns to be submitted in the Netherlands, for example, based on their domestic requirements and legislation. Pillar 2 engine itself can be used either as a service or as a license, and we'll be happy, of course, to discuss it separately. So as I mentioned in the beginning, the end game is compliance. However, until you get there, there are important steps to be taken. Any implementation of the discussed technological solution, the PaPM and the Pillar 2 engine, needs to be accompanied not only by the technological experts, but also by a team of Pillar 2 experts. This is to make sure that all the tax technical aspects, as well as the long-term tax planning of the group, is being covered. So we'll be assisting with any implementation process, and in any case, please feel free to reach out with any questions regarding Pillar 2 that you may have. Thank you.
So moving on, if I may pass the ball to our colleague from SAP.
Hey, good morning. Thank you. Next slide, please. So, in overall, PaPM is a very fast calculation engine for very large amount of data with built-in integration to many data sources, capable of being customized for a lot of use cases. One of them is transfer pricing in Pillar 2, and also different processes and applications. We will explain it. Okay, SAP PaPM, we call it, Profitability Performance Management. The short is PaPM, is a standard solution for visual creation of integration, business process, and application that require high-level performance. Okay, due to the flexibility of PaPM, it can also be seen as a calculation engine, a workflow engine, and business process modeling engine for specific customers' use cases. Okay, so in this slide, we can see the three different components of PaPM. In general, PaPM has three components. Let's start on the top. The first component is the data acquisition or business data integrator. As you might know, PaPM is based on SAP HANA, so it's, of course, very fast for reading and writing. By the way, writing is a very important part of the solution. We have integrations functions that allows us to connect to a variety of data sources, SAP and non-SAP, all kinds of databases like Oracle, Teradata, Hadoop, etc. Of course, SAP application, and we can also read and write to BW as well. Okay, one of the PaPM differentiator is that you do not need to bring and save data within the solution to build your model. The solution points to the data in the source system and bring it in the format of the source. In PaPM, we don't have fixed data model or hard data model. We can use the data model that exists in the source system. Once the data from external sources is available to PaPM without data replication, we can move on to the second component, which is the calculation engine, which allows the user to, for example, to harmonize the data, or in the one hand based on functions from the modeling world, and on the other hand, it can run many types of calculations, allocations, and other business functions, so his model can be quite good. So the calculation engine, as we just spoke, is a very powerful tool. Is built to process huge amounts of information. There are few types of calculations that exist in PaPM, such as profitability, allocation, but also planning and forecasting. Okay, PaPM is not a budget planning system, but based on a very large amount of historical data, we can run a forecast model. Okay, and we can model a market trends, etc. And we can return the results to the application, to the planning application, like SAC or BPC, if someone is still running it. Of course, there are machine learning models that knows how to identify the most accurate cost generator. Okay, but if I can divide the functions inside PaPM, we have the areas of allocations, calculations, valuations, machine learning, fund transfer pricing, and cash flow modeling. Okay, added to this, we have the business helper functions like derivations, transfer structures, unit or currency conversions. Okay, all that we need for the business user to run his model or to build his models. As we spoke before, there are supported functions for data collections, like joins and views. Okay, that's in general. Okay, so there is no coding in PaPM. There are formulas, functions that they are selected from a list table, let's say like that. Okay, so the third component is a simulation application that allows you to do, for example, the what if simulation on the model you just built. There is also embedded analytics inside this tool. I think in the demo we will see it. So we explain how to integrate with data, what functionality is available to me for calculation the model or create a model. Once I've central calculation model, we can use it in different ways. For example, you can integrate it into different processes, okay, in different teams with different activities, with built-in workflow. Okay, PaPM is not just an engine; it's a system. Okay, we can see who did what, when, but you can of course run the model independently, so the end user can run the scenario and check the results. Okay, but we can also put it inside one of our processes in planning, as I said, in group reporting, etc. Okay, there are capabilities to drill down to the lowest granular level. We can see value flows. Okay, all these abilities and the capabilities, as I mentioned, come from the fact that the solution was developed natively on HANA, and it can perform calculation in a very fast way in memory without replicating data. And I think from our experience, we can see that projects become shorter, okay, because we are not putting data inside the system and we don't have fixed data model structure. We have the ability, as I said, to connect any database to data sources and etc. Okay, PaPM Cloud supports all required levels of granularity. Which you can consumer product, service traffic, client, whatever you want. PaPM can run through an unlimited number of allocation rules, okay, with very complex rules. It can provide an ad hoc simulation, like what-if analysis inside this tool. Okay, we can send the allocation result as debit and credit postings to the general ledger, SAP and non-SAP. We have strong interface, I will speak about it later, with SAC planning and other solutions. Okay, let's move to the next slide, please. Okay, so SAP PaPM comes with extensive business content for various topics in different industries. In industries, as you know, SAP works with industries, and we have industry-specific content. For example, let's speak about profitability analysis and cost management for 25 industries. This one enables to optimize the profitability and the cost of the product level, the distribution channel, and the customer level. Okay, we have also content for planning and forecasting models as a machine learning based models. Transfer pricing, okay, transfer prices and product cost pricing for calculating product and service prices, and also transfer prices of goods and services between companies. Okay, when I say we have this sample content, I mean we have something to start with. Okay, it's more like starter kits. We have content for IT cost management, for calculating their billing cost and analyzing their cost. Process mining. We have value chain for sustainability content, determine the environmental and the social impact of the company in product, services, value chain. We have tax calculation. Okay, we don't need another tool to do the tax calculation. Tax calculation and reporting for calculating direct tax and reporting on income and deferred taxes. Okay, we can see more and more customers using it. So we can see more and more customers using and building their own use cases, but most of them using our starter kits. All of this content can be easily connected to SAP systems, SAP ECC and S4, and that makes it very easy to start. So just one more sentence. What sets PaPM apart from other solutions in the end-to-end transparency and traceability we achieve? Okay, it's other solution that makes complicated allocation and calculations to achieve profitability in a very granular level. In order to achieve reasonable performance, must aggregate data. They will start with certain processes, aggregate the data, continue to the next process, aggregate again the data, until they reach to the final result. Everything before the final result is essentially a black box to the user, okay? Because they cannot access the numbers before. In PaPM, we do not destroy the level of the data below. When we get a final result, we can drill back to any stage of the process. And this is very unique, okay? Next slide, please. Okay, we already spoke about this slide. This is the 3-in-1 solution where we can address specifically to the transfer pricing and the BEPS Pillar 2 challenges, okay? And we can see how we can do it and each and every capabilities and features in the PaPM solution. Okay, let's move. Let's move to the next slide, please. So we spoke with Netflix, and they thought we can, they need an army of people to do it. But with PaPMs, we achieve to reduce the number of people that runs the Pillar 2, and they are very satisfied. Next slide, please. Okay, so we have many customers, success story. In Israel, these are the customers that I think that I know that are alive. It's the CBC Israel. They are still in project, but all of the rest are alive in different use cases. And so I think we have a good ecosystem here in Israel. Next slide, please. In the world, we have more than 400 customers live. We have from all industries, you can see many use cases there are running. Yes, not only one. Please continue. So the Halon story is quite nice. Halon is a large pharmaceutical company. They automated a significant volume of the operational transfer pricing processes, and that shortened the execution time from 1 month to a few days. Okay, so this is one of our biggest success. Okay, and it was not easy over there. You can imagine pharmaceutical global company, many system, all the challenges that Yuval Weiner and Ben mentioned. We could achieve them. Okay. Yes, next slide, please. Another customer is a Globant. Okay, they also runs transfer pricing in PaPM, and I think they succeed to automate all the processes again. Okay, I think they shorten from 3 days to 30 minutes. Okay, running transfer pricing. Go ahead. So as you understand from before, SAP PaPM cloud runs inside HANA Cloud or DataSphere. Okay, DataSphere is the new data warehouse cloud of SAP. So PaPM can work on data inside of the assigned HANA Cloud or DataSphere natively in the same memory. Okay, avoiding reconciliation issues, data latency, and higher cost of additional HANA memory. Okay, so the PaPM results are stored inside the HANA Cloud or the DataSphere, and this is immediately available to other application. Okay, we can run it. Okay, so we combine everything today in one solution inside HANA Cloud or DataSphere. So we are moving between the application in a seamless way. Okay, so customers that have SAP data strategy, that's the way to go. Okay, please let's move to I think the last one. Okay, next slide. So I told you about the integration. So we can see the integration for PaPM BEPS Pillar 2, okay, we can move from group reporting to PaPM, the data this is already built, okay, and do all the calculation and send back, okay. So when we said we do the integration, we come with content. It's not just let's build together. No, we already built it. Let's move to the next slide. Okay, we have a roadmap. So there is a link. You can see the roadmap in the tax area and the transfer pricing. It's quite rich. Okay, let's move. I cannot enter it. Okay, so in the last couple of I said month or one year before, SAP launched the new universal model of PaPM cloud. Okay, we have the standard model, and now we spoke about the universal model. Because PaPM got more and more use cases from the tax area, SAP wished to get more auditable inside the system. Okay, more financial, I would say, capabilities inside this system, and to make it very, very, I would say, more transactional system. Okay, so it will be very easy to audit, and it will be more compliance with what we are looking at financial systems. And this is the new model for the last year. I think that's all. Let's see we have another slide. No, thank you very much.
Thank you so much, Yuval. As I think it's very important to just underline all the innovations that are happening on the SFE side, right? And that's gives us more and more opportunity to implement our use cases on top of it. Let me throw some lights on the PwC side of the story on top of it. So if we go to the next one, um, I want to share some of the trends that are happening in the market, right? And with that, also give you some insights on what are others thinking about or doing. So, SAP, my colleague from SAP, Yuval, already touched upon it with their success stories with various clients and industries. So, what we see a lot is there are typical challenges with the usual way of working, especially around the tax use cases, right? So spreadsheets is still quite widespread. It's used in many organizations still as we know it. Probably most of you are also using spreadsheets, and we know the challenges that comes out of spreadsheets are it's time consuming. We just heard a story from Yuval about a customer that takes almost 30 days to gather the data all together for operational transfer pricing purposes. That's just not sustainable in today's time. They are prone to errors, right? There is no transparency. Anybody can do whatever they want in the system, in these spreadsheets, and there is absolutely no audit trail. Who changed it and when? Um, I can tell you that similar stories of the implementations that we have done and the success stories coming out of that. We have stories of customers who spent weeks in collecting data for their audit. Customers who had absolutely incorrect segmented P&L because it was done via completely distributed collection of data. So all of this is not only about that you have faster solution, it is also about your risk that you have with the numbers that you produce to the tax authorities if they are not correct. You have that huge risk for the penalty, and your reputation as well is at risk. So with the SAP integrated solution, which is where we see the trend of more and more organizations moving towards that, away from the spreadsheets, is not only driven by one aspect, which is more efficiency or just that there is more automation. There is much more to it. And so if you see what you can achieve with such a solution is that you have a complete audit trail. Who did what? When was it done? Why was it done? So if we are talking about operational transfer pricing, we are looking at what were the allocation keys used for your operational expenses, and if it were changed, who changed it and when, and what was the reason behind it? How are you distributing your costs between the various transaction groups for your benchmarking purposes? So all of that needs to be completely documented. And of course, you need access to this data in more or less real time. You cannot rely on somebody sending this out to you, and it needs to be transparent. So it can only be achieved if the data is directly read from your source systems. And as my friend was talking about, here we are talking about a solution that does not even replicate your data. So it is reading the data directly at your source and is reading on top of it. So you have a complete transparency on that the data that you see is actually from there, and there has been no manipulations done on it. Real-time access for transfer pricing, and only then gives you the possibility to have further insights. So I'm talking about you have the data in front of you for your year-to-date picture against the benchmark. You can see that what are your deviations, and then you can act upon it. So if you see what the new customs are being applied, what will be the impacts of these on your ETR, on the new prices that you need to set, or what are the adjustments that you need to perform, and all the what if and simulation are critical around it. And you cannot do that with the spreadsheets kind of setup that you may have. Another bigger pain point always is that you are relying on a heavy or huge amount of year-end adjustments, and we see that the authorities also do not like it, and also organizations want to get rid of it, but it's not possible to do it with that kind of setup that you may traditionally have. With such a solution, which is fully automated, you are basically adjusting your prices proactively, and you are also doing your true up adjustments as you move on, right? So from Q1, Q2, Q3 onwards, you are already proactively working on your taking care and making sure that your deviations are coming into the compliance range, and thereby making the year-end adjustments absolutely minuscule. The systems here are capable of handling complex scenarios, large data volumes. So imagine it like this: if you are a large organizations, you are talking about hundreds and thousands of SKUs and maybe services as well, and you may have multi-layer allocation mechanism. So it's the handling of data, which is huge, plus also the complexity of logic. You need a system that is robust and solid and proven that really works, right? So here we have that example. And then also IT angle is super important. Why do we cover about it? Because the CIOs of today, they have one clear mindset. They don't like to have small satellite applications doing one or the other use cases. And because it is not sustainable to maintain these satellite systems for one small application doing TP work, another one for Pillar 2, another one for tax accounting, and those wires are then, or the interfaces reading the data from your transactional ERP systems, it's not sustainable to maintain it. So CIO has one mandate: how can we have a leaner architecture? How can we make more or get more out of our core systems? And that's where an SAP integrated solution really helps. And it's also about, can these applications be sustainably maintained? You have to imagine that you can build something in-house on some stack, but how would you maintain it if that person is gone? How would you run the show when nobody's around who built that for you? So all those aspects from IT strategy perspective are quite important as well. And it's also super important that when we talk about transfer pricing, about Pillar 2, or any of the tax use cases, you need a system that is scalable. It should be flexible, that you can extend as well, because you may be doing mergers, you may be having acquisition scenarios, you may be changing your supply chain. Then there are the external factors, like there is a new reporting requirement or filing requirement. How can you scale the setup in a way that is efficient and easy? And that's what is then covered by these aspects. So there is a huge trend of moving away from those tiny silo satellites into more SAP integrated solution options for tax purposes and also beyond in a large way. So if we move to the next one. So from PwC side, as I talked about, we play an important role when it comes to the tax technical knowledge. So you can imagine Pillar 2 requires a lot of expertise, which needs to also have a global coverage, right? So what we have done is, from our side, for that purpose, created a starter kit for Pillar 2, which runs on PaPM engine. We also have a starter kit for, of course, operational transfer pricing, the first one that we will demonstrate today to you. There is also a starter kit for tax accounting and service charging scenarios. So there are a bunch of tax-based use cases, and also beyond tax for finance, IT cost management, profitability analysis that SAP already provides out of the box as well. So this system is in a way an all-rounder that can help regardless of the industry, regardless of the scenario. And why is that? We will also show you in the demo in a bit, but one of the key aspects is that the system is able to read data from any source. It could be SAP or non-SAP, and you can imagine tax may need a data that is not probably only sitting in your SAP system, right? So you need to collect data sometimes from an Oracle database, sometimes from a consolidation system, which is a completely different technology, and that is made possible by PaPM. Plus, you have a robust calculation engine that runs on HANA. Handling of large data and complexity logic is not a problem. I'm underlining another aspect is that, like you have the allocation cases and operational transfer pricing Pillar 2, all of service charging, all of that have an allocation angle to it. And PaPM offers a function out of the box for allocation. You want to do multi-level allocation, direct allocation, indirect allocation. You may have any kind of scenario, and this is available as a function out of the box. And it as PaPM is a low-code platform, you are less prone to error with that. Imagine you in your spreadsheets, if you had an allocation like function, how easier your life would be. You don't have to design your own formulas to do all of that. That's what is provided by PaPM. And on top of it, for all of these use cases, the story does not end after the calculation or simulations are performed. You need to push back those results back into your source systems or your consolidation systems or your tax provisioning systems. So it needs to go back to the ledgers. And that is also where this is an important aspect fulfilled by the PAPM system. So we can push back the new prices, we can push back the true-up adjustments, we can push back and post the intercompany service charging invoices. We can result of Pillar 2 tax accounting similarly as well. So that's where it's a holistic platform for tax purposes, which covers an end-to-end automation. So automation is not only that you read the data and do the calculation, it also finishes that last cycle, which is typically the chain which is so challenging if you have a non-SAP system to achieve, is around the pushback of all the results to the source ERP systems. If you go to the next one, so very quickly, just to give you an idea about how an operational TP implementation, or for that matter, any implementation on PAPM looks like. So I'm assuming a lot of you probably are from tax background in the call, and just to give you a little bit of familiarity of how these projects actually go on. So it starts from mobilizing to understand what is the scope, the planning around it, what the milestones and deliverables will be. So mobilizing is all about gathering all the information to get started, right? So who's going to do it? When are we going to do it? What are going to be the phases? What are going to be the deliverables? And all those mobilization step gives us the possibility to getting further into the design. So what is going to be a design principle and governance framework around it? What are some of the key decisions that we have taken? For example, around what is the architecture going to be? What are the user stories that we are going to enable? And then getting into the detailed requirement and design around all of those aspects. Of course, there is also an angle of localization. So a lot of these tax use cases, you need to have one global template, but then there will be localization aspect depending on the country that you need to roll it out to, right? And once you have all these design elements done, then it actually is the build or config phase. So the project is not only just build and config. You can see there are steps before and there are some steps afterwards, right? So build or config is, so for example, if you take the PwC starter kit, it already has the content for Pillar 2 or for operational TP. We bring it to you, and then we start connecting it to your data sources and customizing it according to your organizational setup. So what companies do you have? What are your trade flows? What kind of materials there are? What are your segmentation rules? What allocation keys do you want to use for the various accounts that are in place? So all that configuration aspect is taken care of. And then you are, as part of that, also, of course, doing the testing, the cutovers, the end user training. So you have a look at that, yes, validate the systems are according to what you have desired, and then you deploy the scenario. That is what we call the go live. So you've deployed it, and then you also make sure that there is kind of a handover, that you are using the system. But the story does not always end there. There is also afterwards how it's going to be maintained after it has gone live, right? So there is a journey around it. The message here is not to scare you. It's basically to inform you and make you aware that a lot of these steps are necessary, and it's important to be aware that there will be some stakeholders involved. Although I can tell you that with PAPM kind of implementation, because it's sitting on the cloud, you do not disturb the IT a lot. So there is a lot of independent work that goes on. You can do a lot of work in silos. So if you are worrying that, oh, we have large projects going on in our organization, how we will achieve something like this in parallel, don't worry about it. We have done this several times with other organizations, and it's not as disruptive as it may sound like. So if we go to the next one, and I will give the stage to Midhun at this time to take you through a little bit around the process that we will then also demonstrate later. Midhun, over to you.
Great, yeah. What you're looking at is basically the end-to-end operation transfer pricing process. This is what you will implement. Let's say that if you want to do a complete implementation, rather than going for a big bang approach, that I want everything, you can actually do a step-by-step approach. Here, what we have done is basically, divided the entire operation transfer pricing process into 3 levels. So the first level actually that you see here focuses on your data collection of your actual data for your year to date, and then preparing all the reports, surrounding your actuals or your P&Ls. So basically, at the first step, what you will do is like you would need to know or need to connect to your, ERP systems, and then try to pull it to your, operation transfer pricing solution. There would be various data, for example, your financial data, your master data. There would be benchmarks stored there. There would be business partner data. So everything that is needed for an operation transfer pricing solution needs to be fetched first, collected, and then it doesn't stop here, because you would need to apply your transformation on top of it, because you would need to do your TP segmentation. Let's say, for example, you have your financial postings, but based on your transactions, you need to identify which segment it belongs to, based on your needs for transfer pricing. So that would be basically that you both do your data collection and your transformation at the first level. So once you have arrived at the transformation, what it will bring you is basically you can prepare the P&L, profit and loss statement report, from a transfer pricing perspective for an entity, showing all the data, your revenue, COGS until EBIT for your TP segments. All your transactions or intercompany transactions can be represented in a P&L segmentation. And obviously, you would also do the allocations there, for your cost allocations. So once you have all the data, then you would actually, prepare your margin monitoring report, where you find your, see your risk assessment. You actually find what are the entities or what are the intercompany transactions that have a very worse deviation or deviating from my targets. So all this information would be really useful to monitor how your transfer pricing process looks like. That would be a level one. So moving on to level two, where you would be preparing your forecast. Now you have seen your year-to-date picture. If I want to see my year-end picture, obviously you need to generate your forecast. So there would be various methodologies for your forecast. Either your company already has a forecast in place, so the tool or your operation transfer pricing solution, a PAPM, simply fetches the forecast data. Or if you need to generate your forecast, you could also do within the solution to generate your year-end, rest of the year forecast. So now, after combining your year-to-date data and your forecast data, you would get a clean year-end picture on how my company would perform according to my forecast at the year-end. So you can actually do your, let's say, your price setting on top of it. Let's say if I continue to do my business as usual, at the year end, my deviations are going to go so wrong that I'm not compliant at the year end. So you can do your transfer pricing setting based on this data, so that at an every SKU level you determine your optimized transfer price, so that you are compliant at the year end. So all your simulations, your crop adjustments, everything can be done here. So that would be your level two. So now you have done your level one and two. Now what is level three is basically, now I'm pushing back the data to my source system, because you would have various things. Or if you do your true up and true down, you need to post your credit and debit notes back to your ERP. That's one. Or if you have a new transfer price, you would need to basically update your purchase info records or your sales conditions. So these two obviously sitting in your ERP. Then what you can do in level three at this stage is basically connect your ERP systems back, so that all the information, optimal information that's generated out of your OTP solution can be written back. So in this way, if you implement level 1 to 3, then you would have both an inbound automated and an outbound automated. Your end-to-end operation transfer pricing solution is completely, automated end-to-end. So this is how we approach. You don't need to just start doing everything, but now this makes it clear that what level should I focus on, as a customer or a client, that should I focus on complete level 3, or should I start with level 1, because my pain point is actually my data transformation. So basically, I start with attacking my level 1 and then move forward with level 2 and 3. And also on the service charging, this is for, I talked about the tangibles. Now coming to the service charging, where you need to, split your services that your company has done to your intercompany receivers. So it would have the similar structure as you do your data capture, you do your cost allocation to your services, and then to the respective receivers, and then provide a report for your charge outs. And basically, you would also need to post your invoices. So you also have a level 2 in your servicing scenario, where you post back your invoices back to your SAP. so that your receivers can, pay you back. So both these cases, tangibles and services, we have divided into these levels so that it makes easier for your implementation journey. Yeah. You would want to go ahead with the SAP Analytics Cloud?
No,
or
let's jump to the demo.
Yeah, then let's jump to the demo then. Yeah. Yeah, so now we have jumped, let's say moved on from the slides. Now we actually see the real solution in action. What you see basically is our starter kit built in SAP PaPM Cloud. So as Navjot already mentioned, that we do have starter kits for all of the tax solutions. And what you see here is for the operation transfer pricing solution. So this starter kit is readily available. It has, all the the levels that you see in the last slide. So basically, this can be installed in your system, and then you can customize it based on your transfer pricing needs. So you have a jump start, once you have the starter kit ready installed in the system. So what before I move to the process management or the steps in PAPM, I would like to start with the reports that you see. This is basically the reporting that you see in PAPM. So here you have all the pages and multiple widgets. So what I'm showing you here is a final report of your risk assessment. So this is at a group view. It actually collects your entire data. At this stage, it has done the transformation, the data collection, the segmentation, and what you see here is the result, how your company is performing at a group level on your year-to-date data. So what you see here, see that totally I have a deviation of 4 million euros. Basically, if I'm achieving my target, my deviation will be near zero. But I see that I am deviating by 4 million. And once you have divided your segments, you would see which are the segments that are performing bad though. So there are 3 of them that are performing good and 8 of them that are not good. And not only that, you can actually see from a, let's say, world map perspective which are the bad ones. For example, here I see that there's a major deviation and the rest ones have a lower deviation. So you can represent your reporting or your data how you need in various reports. So I have shown you the world map, and then you can see also the deviation per entity. So I can see clearly here that LE05, this entity is performing, is really deviating from my target. And also I can see based on my benchmark segment. So you can actually, split or segment the data according to your wish, and then prepare the reports. The reports are the easy part here. So main part is the data collection and the logic behind it. But once you have all your things set up, the reporting would be the easy part. Then you can define all your reports how you need. And yeah, if you want to have a look at also your risk assessment based on a table level, you also see here, you can also see all your benchmarks at a table level. For example, you see the company, the trading partner for the company, and then your business area and what function it performs. For example, if it's a producer or a distributor, and then what method it's performing, and what's my actual margin. It's 6% here, and what's my benchmark here? So the benchmark is 5 and my margins are 6. So on this, from this, you get a clear, let's say, bird's eye view of how your company is performing from a transfer pricing perspective. You can easily identify all your intercompany transactions that are, let's say, from a compliance perspective, in red. And moving on from the risk assessment to the trade flows. So this is, can also see how your trade flows between your intercompanies perform. So this picture would give you a complete, view of what is your company transactions that your company is doing. For example, my seller LE1 is selling goods to LE03. So all your intercompany mapping can be, visualized basically here. And this can be purely done based on your existing data in your financial system. You don't need anything extra, but based on an existing ERP data, this view can be easily built with the data available. And also you can view your transaction metrics, your heat map saying what is my sales value between my intercompanies, and various representations, the Sankey charts, and also your transaction flow by TP function. So you can represent your transaction flow between various companies by the charts you like. So we have a lot of sample content here for to start with, and these let's say uh, widgets, I would say, or reports can be built, as much as you want. So these are your trade flows and segments. The most interesting part would be your segmented P&L. So before I go to the graphs at the end of the day, I can just move to the segmented P&L here. I can just open it, see it in a, let's say, in a table format. So here you see your typical transfer pricing segmented P&L. Here you have all your accounts, how these are all can be defined based on your needs. So all these accounts is not fixed here. These are all customizable, and this would be done during the implementation part. So here you can see your net revenue, your gross profit margin until your EBIT. And on the right, you can see your segments, basically how you want to segment your data for your transfer pricing. Here you have your business function, you have your TP function, and a sub function and an IPN or trading partner. And also, as I mentioned, both the nodes and your segments is not fixed. This can be configurable, and this would purely depend on how your needs are, and this can be done during the implementation. At the end of the day, what you see here is basically your entire, let's say your uh, P&L segment for an entity here, representing all the data here for your fiscal year 2023. So yeah, and you can also, it doesn't stop here. If you want to adjust anything, if you don't like your chart type, it's not that you need to involve your developer and say that, okay, I need to change something. Can you please, adjust it? So that's not the case. In PAPM, it's flexible that you can just simply, pull in the columns that you need. You can change your grids there how you need. So all this can be done quickly once you have the reports. Yeah. And yes, you have various analysis. For example, at this level, what you see is basically at the level of your entity and your level of your trading partner. But since you have your data, you could also view your margins at a level of a material or an SKU. So basically, normally that you wouldn't be able to capture your EBITs at a material level, but once you perform your allocation down to your material level, you can obviously see how each and every material is performing. For example, if you see here, this gives a view of your entire material list in your company. What is the transaction behind it, like what company is selling to which company, and then also you see what is your margin at your material level. So this level of data can only be done in your PAPM engine, where you can actually do your allocation and split all your OPEX, your costs, which are not assigned to a material, to your materials, and then you can see your revenues, cost until EBIT level, and also see your margins, how it's performing. So what's beneficial from this report is basically, since you already see the margins at a material level, you can simply do your forecast also at a material level, and then try to find an optimized transfer price for an SKU, or for an SKU what for the year. And so basically in your transfer, let's say price setting, you would basically try to find your optimized transfer price at each and every SKU. So this transfer price can be updated in your system, so that at an year end you can find a compliant P&L. So not only you can do your let's say your adjustments at the entity level, but using price setting, you would also do it for each and every SKU. So you have various, let's say thresholds. You can say that my material should not go below my production cost, or should not go beyond my, ASP. So all this can be done, and then you can achieve it an optimal transfer price that is, suitable and optimal for your company. So these are all the reports. I mean, it doesn't stop from here. You can build as much as reports as you want, because you have your data ready. That's the beauty of PAPM and the reporting here. And if I jump to how it looks, what would be my day-to-day work as a PAPM user, that would be the screen here. So it basically, you just need to click on the process and it brings you a process screen. So this is how, as a user, my PAPM screen would look like if you're not going, if you want to run your, let's say the data collection, etc. So these are your end-to-end processes. So this looks like too much. So let me uh, maybe just do it. So as you see there, these are all your process steps that is needed to prepare your P&L. What I'm doing is that I'm just trying to show you at a high level how it looks basically. This is the same flow that you saw in your level 1, 2, and 3. That is implemented in PAPM. So level 1 is basically you're collecting your transaction data. And then if you have any manual uploads to be done, then we need to avoid that. But if you do have some information that's coming via Excel, yes, you can also do a manual upload. Then comes your entire segmentation here. Basically, you're trying to perform your segmentation rule. What is my segment? What is my IP owner? How does it? How does my benchmark look like? What is my P&L structure? All this can be. These are your configurations that can be done. And then once you set up, extract the data, set up all the configuration, what you simply do is basically click on your green buttons. So all the blue ones are your tables or your setup, and the green ones are your activities that you simply need to click on that and then say execute. What it simply does is automatically it would fetch the data from your ERP system, and then let's say prepare your YTD report. So these are, you here you can see all your segmentation, everything created. So what you see here, once I do the execution, you can see all your reports being created. For example, your segmented P&L. If you want to see a segmented P&L by function, you can create. So how do you see your reports? Or simply just click on this and then click on the button to visualize. You would see your segmented P&L also visualized, via the activity list. Yeah. So, and also you can say that, this is one of your report, but if you want to, let's say, customize it on the fly, then you can also, see what kind of chart do I want? Do I want to include more columns, your measures and everything? All those can be done, quickly via your, reports. Perfect. So moving forward, so this is a step-by-step process. So, there is also an angle that, look, maybe it's not one user who does the, let's say, the entire activity, but I would do it. There would be an operations team. There would be a transfer pricing lead who needs to control. So you could also define a performer and reviewer saying that, okay, my performer actually maintains all the configuration and everything, but there would also be a reviewer who can review what the operations team has done and then say, okay, thumbs up. Now all the configurations looks like, and you can execute it for your for your YTD reports. So if you see here, if I bring here, you can also see all your, you can also set an activity to, let's say, complete it so that your next activity starts. So basically what you're seeing here is a step-by-step activity to prepare all your reports. So at the end of the day, you can still go forward, prepare, do your forecast execution, and create your forecast reports. And then moving forward, you can just also set up what is my price setting thresholds here. Let's say if you want to say that my transfer price should not go beyond, let's say 10% change, then you can also set your thresholds, etc., and then arrive at your, let's say, year-end report. So basically, what is this? Is basically you have a step-by-step approach to both automate your data extraction and also prepare all your reports, in PAPM.
Right. So just to add some of the context here. So if you see, when you have a system like this, it is basically to make your life easier, right? You can do the entire stuff here just with couple of clicks. So it not only about automated collection of data. So here the model that you see is actually built with the purpose that it directly integrates with any SAP ERP system. It could be ECC, it could be S/4HANA. It redirects, for example, if it's S/4HANA, directly from SEDOCA, Universal Journal. If it is ECC, we need to read it from BKB of BSEC. We take those transactional data and we read it. So you don't have to worry about all of that. And of course, the system also provides you the flexibility to maintain the mappings and the rules that are required for the transfer pricing purposes. So segmented P&L, how do you want to do your forecasting, how you want to do your price setting, all the rules and parameters around it can be flexibly maintained here by the user. And you notice that there are also the collaboration and workflow possibilities. So you can use the possibility of commenting. You can mark a certain activity as done, not done. So for example, here on the comment, you say one of the activity was around review of your benchmark rates. So you can say, yes, I've looked at it, but one of it, maybe this one, I am not so sure. Could you please have a second eye on it? So you don't have to go out of it directly here. You can use the workflow and collaboration capabilities. And you can see you can add an URL to a document. So you have all the audit trail sitting in the system. Now, we can go on and on and on about it. But I'm also conscious of the time, and the purpose of it really was to show you a little bit of the flavor. But before I jump out of this one to move on, important to just show you that this actually is a platform where you don't write the code, right? As Yuval mentioned as well before, it's basically a drag and drop kind of an application. You see there is a palette on the left where all the activities that you need, all the functions that you need for your calculations and everything is available as a function. And now you can see allocation function is being highlighted. So it could be any complexity of allocation that you may have. It can be easily achieved with this one. Of course, it also has the standard write back APIs available out of the box. So I want to post it to general ledger. I want to post to accounts payable. I want to post to account receivable, sales and distribution. So covering all the aspect you can imagine, SAP here provides those write back possibilities out of the box. Imagine if you have to develop all of this yourself in some other solution, then you can take ages about it, right? Here we are talking about doing this using these functions quite quickly. So not only with these kind of innovations so technology coming from SAP, our content on tax coming from our side, what is happening is that with these innovations, we are leveraging all these possibilities to make it easier for the end users, whether that's also about making it cheaper, because of course the implementation times are small, right? You are not developing and building it everything from scratch here. So why we believe SAP PaPM could be a choice worth considering. So if you see, just to underline all of these, is that flexibility for data collection guaranteed, large data handling guaranteed. You can do extensions and scale it. You want to add new reports, you want to there is a new regulation, you want to adapt for it, covered. So there is huge flexibility. If I look at the second pillar here, it's not always only about calculations, right? If you see spreadsheets, it's only about calculation, right? But we know today it goes beyond that. You need process monitoring, governance, the transparency, the audit trail, all of it. And that's when it becomes an ERP enterprise level application, and that's guaranteed here. Why the third pillar makes it also an interesting choice is because this is an all-rounder, right? You could use it across industry. You could use it for multiple tax use cases. So just to give you an example of one of the customer that has gone live for us recently, we call the project SAP Tax Transformation because they are leveraging SAP platform, PaPM, DataSphere, SAC to completely transform their tax processes, fully automated, and that included BEPS Pillar 2, operational TP, service charging, CBCR, all of it, also tax accounting. So imagine, and all of these use cases have interdependencies, right? The data of one is an output for the other one, and they need to run in tandem. The timing differences can be critical. So that also helps, right? So this also helps your CIO to have a leaner architecture. And beyond that, it can be used by finance and controlling team as well. So for you, it becomes easier for your business case. And the last bucket is around the starter kits by the PwC tax and technology experts. So we are talking about hybrids, right? We are hybrids, people who understand SAP, technology, PAPM, tax, operational TP, pillar 2, tax accounting, general rules in country X and Y. All of it is covered. So you can imagine that with that kind of approach, and also the starter kit that is built with this kind of expertise, is something that is also implemented and have gone live in large organizations, like some of them really, really large organizations in Europe and US. You are fully you can fully rely on the content that is coming out here. So if I go to the next one, so what are the key takeaways before I also open it for Q&A? I know that we have 5 more minutes, so I'll not take more than 30 seconds on this one. The key takeaways for you is go for it, right? There are organizations that are not, it's not only about the big organizations anymore. I can tell you, I have done these kind of implementations now for organizations that don't even make a billion mark, right? A few hundred million euros in revenue, and they still have these kind of solutions. And one of the reasons is not the pain only, or the efficiency, or the external factors from tax authorities. It is also because they want to be digitally more transformed and have all that reliance on all of the manual processes gone away with. And at the same time, also because these implementations are not as expensive as it used to be 5 years ago. So the innovations from SAP and our innovative approach makes it cheaper and cheaper for you to move to these kind of solutions. And the next one is that your company may already have it. I mean, some of these SAP applications, you may already have it in-house, so you don't even have to probably buy a lot of stuff or spend too much money. So we can help you find the right choice looking at your landscape. And that is where I will end my message, is that we can help you, whether that's around, you could be on step 0 today. That is basically you have no idea of how do you even get started. How do you build the business case? How do you convince your other colleagues to get to this one? What solution would make sense for you? How to implement these solutions? We can help you end to end, right? So we can help you from step even -1 all the way until step 10, which would be like completely implemented solution, and while with that completely transformed your tax department. With that, I would like to open it for Q&A. And I see that we have some questions here, and let me take a few questions. So I'm just going through some questions, and I'm going to pass it around to some of my colleagues here to answer them. So one of the questions here I would have for my colleague Yuval Weiner. So Yuval, the question is on pillar 2, and the question is around, we understand that you are talking about here the solution and the managed services aspect as well, but we are all still at step 0. We don't know where is our data sitting. Can you help us with something like that as well?
Yes. So as I mentioned before, I think the first step before extracting the data and before utilizing it to perform the calculation under the PAPM solution or the Pillar 2 engine, the first step would be to actually perform a limited project, which would, in essence, analyze the relevant data points which are necessary for performing the calculation. So in essence, under Pillar 2, you have more than 200 possible adjustments that need to be performed to your ETR calculation. What we do as part of the initial project at stage 0, so to speak, is basically analyze the relevant data points out of those more than 200 points. And with the help of the technology, we can pinpoint the relevant data and then be able to extract them. So of course, this is something that comes as more of a full package and the road towards Pillar 2 compliance, as we discussed in one of the slides.
Yeah. Thanks, Yuval. I have one other question that we can take in the interest of time, and the other questions we can probably respond back by email. So the other question is, which I will answer myself, is around how much does it cost and how long does it take to implement an operational TP solution? So I can answer this very easily for you. It's a cost, of course, the simple answer, it depends on a lot of factors. You want to scale to level 3, you want to scale to level 2, as you saw in our slides before. Also depending on your landscape and how many entities or what your global presence looks like. But I can tell you that this is usually in a few €100K or USD, and not as expensive as it used to be earlier. Earlier, it used to go into millions. So we are looking at huge optimizations there. And also the implementation time can be as small as I have seen organizations going live in less than 2 months. And it can also, for a large organization, could be like 9 to 10 months, depending on the scale you want to enable your organization. So with that, and we will respond to other questions, but I would like to thank all of you for your time and interest and listening to us. And I'm sure that you've heard some really interesting insights coming from my colleagues in Israel, from our side in Germany, but also from SAP. Special thanks also to SAP for supporting this webinar today. And most importantly, if you need any help, you need any assistance, you need further information, please reach out to my colleagues and we will be in touch with you, and we will make sure that we answer all your questions and help you in any way we can. Once again, thanks a lot and wish you a nice day ahead.
Thank you all.
Thank you.
Thank you.
Bye-bye.